What's going on, everyone? My name is Nicholas Merten here from DataDash, and today is March 24th of 2025. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I'm here today to give an updated viewpoint on Bitcoin's short-term price analysis, but most importantly, beyond talking about Bitcoin and maybe even some opportunities that may be presenting themselves in the altcoin space, I want to get us back on track on the big picture. We do not want to lose sight after just a couple days of price action on what is likely ahead of us in the next month, the next few months, as I think it's going to be an incredibly volatile and uncertain time over the next couple of months. We got a lot to unpack here in today's video. If you guys happen to enjoy it, consider dropping a like, grab a cup of coffee or some other hot beverage, and enjoy the video, guys. I think you guys will like this one. So let's go ahead and kick things off here. I want to start by talking a little bit here about the fundamentals here, because we're going to be diving into the short-term price analysis. We're going to be talking about altcoins as well and how there could be some opportunities presenting themselves, especially with this change of character in regards to price reclaiming back above the 21-day and the 200-day. This is definitely looking, at least in the short term, like we're not heading lower here over the next couple of days or the next week or so. This could provide a really solid rebound opportunity in some plays. And I want to spend some time to talk about that in a bit. However, I want you guys to keep focused as well on the big picture. I do not want you to get sidetracked by a little bit of price action over the past couple of days, leading you to believe that we're going to all-time highs or we're going to be really continuing up the next leg of a supposed bull market in crypto. We can see that the key inflow sources that are actually going to determine long-term trend direction are still negative. We have been for nearly coming up here. It'll depend on how things really go here this week. Maybe there's some change of character here in regards to the inflows and outflows in a significant way. But essentially, we have not seen any new inflows to the ETF for nearly 3 months here, going back here to the end of December. So really throughout 2025, it has been a neutral year when it comes to ETF inflows due to the outflows we've seen since back in late January. But beyond that as well, we also have MicroStrategy dramatically slowing down here. It has been over a month. MicroStrategy has only acquired 200 new Bitcoin. Now, of course, there are other Bitcoin treasury companies. There are Bitcoin mining entities out there. There's obviously the ETFs that we track as well. But none of them are showing up in a substantial way. And if we're seeing MicroStrategy, which plays such a big role in the acceleration of accumulating Bitcoin, starting to slow down and flatline here, this definitely leaves me worried, not because Michael Saylor is not eager to buy more Bitcoin, but it tells me that through the credit markets, he's not able to issue these convertible note bonds that played a very huge role in allowing MicroStrategy for practically none of their own capital to be able to go out and buy a ton of Bitcoin. So if that's slowing down, if there's not enough bidders out there for those convertible notes, if the ETFs are stalling here, then we need to continue to keep in mind here that this is likely to be either a lower relative high or just a bump in the road in a broader downtrend. So don't get sidelined by that, guys. Don't get sidelined also by the fact that as we take a look at the broader stock market here, that we're at generational highs here. We're up against that long-term line of resistance. I do not want you guys losing sight of this here, because if you do, it may leave you losing everything, even though you might in the short term make some money on paper. But if you end up not selling at the right time or mitigating your risk by setting a stop loss, right, and not zooming out and keeping the big picture, then you could really get chewed up by the market. And I don't want to see you guys get caught in that position, right? I'm going to do my best to share with you guys the big picture first, so we always keep that in mind here from a risk management perspective. But that being said, while I'll be here to tell you guys where I think price is going over the long run, over the next couple of months, the next year or so, I'm also going to be honest in saying when I see opportunity in the short term that might counter that. Right? If we are able to really hold in this 21-day and the 200-day, this is starting to signal at least a change in optimism at this price level versus where we were back here, where the 21-day was acting as a consistent means of resistance. Meaning we might have a nice little short-term bump here in markets. And what could that really mean in regards to opportunity? Well, I want to again echo the importance of reflecting back on what happened back here in 2024. we had lots of these sell-offs down below the long-term moving averages, and then they would come back up here above the shorter-term moving averages. This kind of waxing and waning here in price here, eventually setting in our relative low back in August, right around the $50,000 price range. And essentially after we reclaimed those long-term moving averages and held the 21-day consistently, having that secondary wave of buy-side pressure. Right? So keep in mind here that we could be zigzagging like this for some time. We could easily come up here into the $90,000 range here for Bitcoin's price if we are able to hold in these moving averages. And this really leads us to exploring, I think, where any kind of real multiple opportunity is at this point. If you guys are wondering whether or not I think Bitcoin's going to go to new highs in this cycle, I would bet it's probably not going to happen. I'm not saying that it couldn't go to new highs in the future, but I don't think that that's in the cards right now. Nonetheless, altcoins have been through a bloodbath correction. They are down from their relative highs up here at around 450 billion, still at a 50% correction, even considering the couple weeks here of upside price action we've seen the last 2 weeks since back here in the capitulative lows at 200 billion into that 200-week moving average. So this gives us a window for some volatility, some upward move, some positive price action to play out into retesting these moving averages up here. So we've got a couple $10 billion in the others market cap, probably not to mention as well in some of the other plays that are not included in this others market cap metric. So I want to go ahead and spend some time to talk about some of the pairs that are at least looking interesting. Now you guys know I have been generally for the long-term bearish on Ethereum, and we were originally really bullish on Ethereum. We bought Ethereum back 80 bucks, rode it up into the $2,000, $3,000, $4,000 range, made life-changing returns from that. However, we've been bearish on Ethereum for a long period of time, and thank God we've held that mentality because Ethereum has just been getting worse and worse and worse and worse. Not even the ETF could save Ethereum back then. It's just flushed down against Bitcoin. However, we're at a price point here that is very significant, where the bounce lows were here in December 2020 before really altcoin season kicked off and the real outpace of Ethereum against Bitcoin initiated. But beyond that as well, just to keep it in perspective, this is a near 75% correction, meaning it lost 3/4 of its value against Bitcoin. And what I like most of all is that if we take a look here on the daily, we have a real change of character in regards to price. Whereas this was in a clear downtrend with these kind of short-term bounces that would fail out at the 21-day, or we had maybe a week or two where we were able to get above it, but we faced resistance at those long-term moving averages, constantly chopping back down. We have now got a nice, nearly 2-week long base here where price has been relatively neutral. And we're getting real cozy with that 21-day moving average. Again, at the end of the day, while I'm not here to tell you guys that I think Ethereum's going to 10K, as some analysts will have you believe, and that Ethereum's fundamentals are really strong, which they're not, right? I'm just saying that I mean with all due respect here. Like, I'm talking about on-chain development, real new exciting DeFi apps. I'd ask anyone to just name 3 of them. And unfortunately, probably no one can. I would love that not to be the case. But putting all that aside, right, my more opinionated take on the fundamentals and the state of Ethereum, that doesn't mean that in the short term, this can't rally up here to the 0.29 or 0.3 range on the BTC ratio for Ethereum. And that alone for Ethereum is a nice little bump up here, nice 20% move. Not to mention if you consider that Bitcoin might trend up into the $90,000 range, that combined could be a really solid 30% to 40% move depending on the price action for both of them. So this is really potentially a nice little short-term rebound trade setup. Maybe not a long-term trade setup, but something where we could go into these moving averages, still face resistance, and then roll back over. In the short term, that looks quite exciting to me, especially now that we've gone from a clear downtrend to something that looks like we may be flatlining at this very significant psychological level, not only a prior support range, but also a 75% correction after multiple years, right? We're talking about over 4 years here, about 3 years of a downtrend here, 3 years and 3 months. Wow. Definitely interesting to keep on our radar. And outside of that as well, Solana, while Ethereum hasn't been able to get above that 21-day moving average, we see Solana, after a pretty brutal downtrend here, from its relative highs, or all-time, it wasn't the all-time highs, but the relative highs here for this bull market since back in March, right, from 0.003 down here towards 0.0015, right? So 50% clean haircut here. We're above the 21 day. This tells me that we've at least got some room to maybe come up into these moving averages, like the top end of the 200-week pocket, or coming up here towards the purple lines, the 100-day moving averages. Again, nothing absolutely crazy in regards to percentage terms, but again, if you combine that with Bitcoin and the past appreciation of Bitcoin here in regards to Solana outpacing Bitcoin in this potential trade rebound, that's at least the one thing I would say here is that while I'm not telling you guys you have to chase this or that this is like an opportunity of a lifetime, I wouldn't be caught shorting the market, right? And I know you guys probably understand here, I'm pretty vocal and honest about it here. I do believe that at this point in the longer term trend, Bitcoin and altcoins are going to continue bleeding down or are going to really struggle to make new highs. But that does not mean you have to short markets. That does not mean you go in leverage shorting the market, all right? So you don't see me pushing, Bybit or Phemex and, BitGet and all these different exchanges and stuff, telling you to go leverage trade 24/7, right? There's a lot of YouTubers out there who are going to do that to you, and they're just trying to get you liquidated because they make fees on the exchanges for getting you liquidated. So a little tidbit of information that some people aren't aware of. But I'm not trying to push you guys to do that here. But at the same time, the main point I'm saying is that markets don't move directionally in a straight line one way all the time. There will be these upsetting, kind of relief rallies here, but in the grand scheme of things, we trend lower or we trend sideways in a no trend scenario. So I think now we're getting to that point where that sell side pressure has been kind of exhausted. The fact that we didn't break down here below the support range and we're getting above that 21 day kind of speaks to that. And it's not just these large cap plays. We can see it here in plays like Stacks, which has been bottoming out for over 2 weeks against its Bitcoin ratio, a clear change in the trend from the clear downtrend we've been in since back in December. So for multiple months, bleeding out, not even having a chance to get above that 21-day moving average each and every time. And now looking like we might be able to squeeze above there and start chasing those longer-term moving averages. That looks like a favorable entry range from a risk-reward perspective. You could set a stop loss down here at 710. You accept that you could lose 10%, and otherwise, if it starts to move up, you can slowly start to take profits at a ratio of your reward potential being three times that. 30% return, 40, 50%. So, and that's totally within the realm of possibility here, right? Not only just in BTC terms, but of course, obviously in USD terms. We also see Fetch as well. Again, same exact scenario here, not above the 21 day yet, but certainly getting close and bottoming out for more than 2 weeks here. This is, again, looking much more favorable than previously beforehand for a short-term rebound. And again, up into those moving averages for Fetch, that can easily get up to the 100-day. We've already seen that before. Not to mention if we push up to the 200-day, even though it's declining, that could be a near 100% move here. Right? You can see Render already starting to break out here, up 8%, well above that 21-day. And again, getting into those pockets up there, a nice 50% rally potential from this point on. I'm not saying that it absolutely can do that. I'm just saying I think that's within the realm of possibility. So 30, 50%, you don't want to get too greedy on it. Take profits before others and lock in returns. But outside of that as well, Pepe, right? We're looking at a custom ratio, Pepe divided by Bitcoin. Been in an absolute bleed here since back in December. But now that we've started to get above the 21-day and hold there for more than a week now, into those long-term moving averages here, right? Just take a look at that price potential, guys. Anywhere from 38 to 77% rally in the short term. That looks kind of interesting to me. And considering Bitcoin might tick up, that's pushing very close to a potential 2x rally here, right? Again, I'm not saying I would just hold it all through there and stuff. I think realistically speaking, for what you could allocate and taking profits more eagerly, I think a lot of these trade setups provide that 50% return trade, and that's pretty great for a short-term window trade. And again, we've seen stuff like this before. We saw Pepe do this back here in September 19th here to September 30th. Less than 2 weeks, a 50% rally. I'm not even saying we need some massive breakout. We don't need any major news catalysts. It could just be simply people buying the dip and trying to essentially believe that this is a broader low in the broader trend here for crypto markets. I don't think it's going to be able to expand new highs, but I do believe that there is that chance for that oversold rebound off the 21-day. And this leads me to kind of taking a look here at others' dominance. because others' dominance here speaks a very interesting picture. We have been facing resistance at this 100 month, right, for since back here in early February. So we're coming up here close to 2 months that we've been basically a line or slightly below that 100-month moving average. And slowly that 21 days coming down here, it's getting easier here for us to get above that. We're really not far away from getting dominance above that level. I wouldn't be surprised because there's been essentially a lot of people probably building short positions, over leveraging themselves to the short side, betting against altcoins, that you could easily get a squeeze here up into this range of market dominance. Again, it's about realizing that we're not going to come up probably to this range at all. We're going to set another lower high here. But outside of that as well, that there's that short-term opportunity, and there will be some plays that do quite well, especially those plays that are showcasing strength right now, that are already above their 21-day moving averages. So I think, again, we should keep open to that happening here. And then eventually it could be that this rolls over and it properly breaks that 100-month moving average as everyone starts to get leveraged long, betting that this is going to be another major upswing in altcoins. People start getting greedy to the upside. That happened time and time and time again back in 2024. It's just that most people don't think back to it. Most people don't remember because most people's attention span is so small when it comes to markets. They don't think back. They don't look at the long-term charts, and they get caught in the same trap time and time again. So I think that, again, this is something within the realm of possibility. We've seen this before, this kind of percentage move here. We had a similar move back here, for example, here in August. Going into September, where dominance expanded 19%, or essentially in real nominal terms, from 8.9% here to 10.6%. And there were a lot of great trade setups here, right? Again, it's you don't need something so big as what we saw back between November and December. You don't need Bitcoin hitting new all-time highs. You can still see these great rebound trade opportunities and then essentially take profits and go back into cash and be a bit more protective as returns long-term are minimizing. But this, again, brings me back to the big picture here, because I don't want you guys to get conflated on the idea that I'm absolutely exuberant on markets. I think the reality here is that there are great rebound opportunities, and there are periods where you want to be in cash so you can buy it again on maybe the next rebound opportunity. But the important thing here to understand is that we do not want to fight the broader trend, right? In the same way, when markets are easily holding above that 21-day, we are on a long-term trajectory where we have the multiple scale potential. Sentiment is getting better and better and better week by week, month by month. We want to be long on the market if that's the case. But right now, that is not the case. We are at generational highs here. We're pressing up against a line of resistance in the S&P 500 that has been intact since the roaring 20s, the early 1900s, for over 95 years. And outside of that is made up of the most euphoric periods of market history from the dot-com bubble, the roaring 20s, and obviously not too far off when we were back during COVID and November and December 2021. And now here in January 2025, when we know there is deficit spending reduction in the United States with Doge and all these other efforts to cut government spending, we know that at the moment there's a big effort around tariffs in the United States and the disruption that that might cause on the continued productivity increase and value for stocks that's been driven by globalism at the end of the day and global trade, free trade. This is going to come under fire here with tariffs that may not be just this temporary fluke or solution to use as a negotiating tactic in the United States, right? Again, it's not here to talk about this. I'm not here to talk about it from like a political perspective. All of these things, though, at the end of the day, when you're talking about financial assets, are not good things. They are things that are going to bring uncertainty. They're things that at the end of the day, maybe they work to the benefit of the United States. Obviously, cutting government spending. I think most people are all about that, cutting waste and fraud, right? We need to tighten our belt. We need to kind of be smart about how we allocate taxpayer dollars. I think everyone wants that to some extent. But at the end of the day, it's deficit spending we're reducing. We're reducing guaranteed spending from the government, borrowing excess liquidity to go out and drum up earnings and activity. And that is going to essentially weaken the overall earnings profile of companies who provide those services. The tariffs are going to put a wane on consumer spending. They're going to probably bolster revenue for the government, but that's going to come at the expense of money that consumers probably would have spent elsewhere. So that's going to, again, further hit the earnings premium or the PE multiple that essentially people are willing to pay on these stocks and the broader stock market as a whole. And that way down, if we are in a long-term downtrend here to the 200-week, let alone maybe something worse over the next few years, if we're really entering into a bear market, that is not going to be favorable for Bitcoin. It's not going to certainly be favorable for altcoins, but still not for Bitcoin, right? We need to understand that Bitcoin, while I know a lot of people have been sold on the narrative that Bitcoin is this risk-off hedge that you want to go to when times are bad, it couldn't be further from the case. Bitcoin does best, and we can see it in the charts. We see it in the alignment with the stock market, that and all other risk, assets as a whole. That Bitcoin is the best performing during risk-on periods because it is on the tail end of the risk spectrum. It is one of the more risky assets. It's a new emerging niche asset that's now starting to become more mature. It's become a multi-trillion-dollar asset now, and because of that, right, the return multiple is not as exciting for one, but outside of that as well, we're entering a period of time where now we're shifting the pendulum. We're now at a period of time where risk on assets are probably going to start to diminish their value over the next year or two. And if we continue to have this kind of uncertainty in the air, more things coming up, geopolitical uncertainties, this is going to put a further wane here, not to mention the kind of waning sentiment on AI and robotics. If that continues to come into the picture, going down to the 200-week is very realistic here. And again, I would say to also take a look at market leaders. Take a look at big technology companies that have been generally outpacing the S&P 500, now starting to showcase signs of weakness against the S&P 500. And Nvidia, for example, down from its relative highs or all-time highs at $152 down to $117, right? It went down to a relative low of 106 here, but we're still down below the 21-day and our long-term moving averages like the 200 and 100-day. I just want you guys to keep in mind this is a little tidbit or a little bit of advice that you guys can use at the end of the day in order to really get an understanding here of where markets may be heading. And that's, again, building custom ratios between these market leader stocks that have generally been far outpacing the market. They've been the top of the narratives that have been really leading the kind of multiple return opportunities in markets where you can make life-changing returns. When those stocks start to underperform, not only when they start to underperform against the broader market, which has been the case for Nvidia against the S&P 500 since back here in June of 2024. This has been a slow but steady process here of clear demonstration, a triple top here in regards to its performance against the S&P 500. When that starts to underperform and also go down below those long-term moving averages, you need not look further than history to understand what happens next when you start going down below those moving averages. And we are there, folks. We are at that period of time. So while there are short-term rebound opportunities in crypto and stocks and all types of different things that you can trade out there in the markets that might be, kind of assets that do well during risk-on periods, right? Don't be caught holding the bag. Take profits along the way because we have been through the greater part of this rally and we are certainly, I don't want to speak in absolutes, but if I had to lean towards one end of the spectrum or the other, if I had to give you my honest take, I think we are definitely due for a healthy pullback in markets. And that's not doom and gloom. Nvidia, as a great example here, has done this before, and it tends to be that the best periods of time to buy these great companies that build phenomenal products, not to mention risk-on assets that are finite in supply, like Bitcoin at 21 million coins, as well as altcoins, which are speculative in nature, but can give phenomenal multiple potential when bought at the right time. They're the best bought when they're at a nice cheap discount when no one wants to trade them. And we are still in a complacency stage here. There are tons of signs of that across the market, right? So I want you guys to keep that in mind here when you're going about building positions in the market right now. In the short term, there can be some good windows of opportunity, but make sure you don't get too caught up in the optimism and you stick to the long-term roadmap. It's where a lot of traders will get chewed up. They get over-leveraged, overly confident, and they get focused on what's happened over the last couple of days because it is difficult to sit back. And unless you build that habit of really looking at the long-term chart, looking what price is telling you in those long-term moving averages, and looking at how elevated we are away for how long from these key long-term accumulation moving averages, you can easily get sidelined and miss the big picture, losing generational wealth and opportunities in the future along with it. I rambled out a good amount here today, guys. I hope this provided some helpful guidance for you guys to go out there, make your own decisions on markets, and navigate managing your portfolio. If you enjoyed it, consider dropping a like. It's a great way to support the channel here, as always, guys. But until the next video, I'll see you guys right back here on Monday next week. Take care, everyone.